Every cycle has one story that outlives the noise. This time it could be privacy. It's the only sector that's still green in the market we've had recently, which has been brutal. Maybe this isn't just a trade. Maybe it's crypto finally remembering what it was built for.
This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research.
Hey guys, I'm Alessandro. Welcome back to the show. The word crypto literally means hidden, but what we built isn't hidden at all. Every transaction, every wallet, every move you make is permanent, it's public, it's traceable. Everything's on-chain and anybody can see it. And that might have worked when crypto was just a niche playground, when you could mine coins at home and you didn't have to do any KYC. But the moment real money came in, exchanges, IDs, on-ramps, that pseudo-anonymity vanished. Anybody who really wanted to find out who you were, where you transacted, can basically do so. The world's first private money became the easiest financial network in history to monitor. And over the last few years, that visibility has only deepened. Governments are talking about scanning private messages. Exchanges are pressured to hand over wallet data. Developers have been arrested just for writing privacy protocols. Privacy coins were delisted everywhere. They were labeled as being too risky. And it wasn't about safety, it was always about control. And it's because privacy, real privacy, takes power away from the middlemen. And that is seen as dangerous. But this pendulum is swinging back, and the new administration in the US isn't treating crypto like an enemy anymore. The SEC Commissioner, 𝗬𝗙𝗧𝗏, literally said, we must zealously guard the right to privacy.
Watching what's happened to crypto over the past several years has just been extremely frustrating for someone who believes that government is there to serve the American people, not to stymie them when they're trying new things.
Builders are coming back out and genuinely building with the freedoms that they used to have. And public opinion is shifting from privacy is a crime to privacy is a right. And while the market collapses everywhere else, it seems like, this sector is actually thriving. And it's because people are finally realizing that transparency doesn't equal freedom, and verifiability doesn't require constant surveillance. Privacy is a human right. The UN wrote it down 75 years ago. No one shall be subjected to arbitrary interference with their privacy. Privacy isn't about hiding something bad, it's about choice. You don't hand your barista your bank statement when you buy a coffee. You shouldn't therefore have to hand the world your wallet history either. And as more businesses come on chain, it's even more important that privacy is inbuilt into the system. In businesses, privacy protects trade secrets. In personal life, it can protect even safety. In crypto, it's the line between freedom and full surveillance. And this is where compliant privacy comes in. The future isn't about going completely dark, it's about selective privacy. Proving you follow the rules without showing everything. You can prove you pay tax without revealing who you paid that tax to or necessarily what for. That's what zero-knowledge proofs make possible. They prove truth without exposing data. It's privacy that works with regulators instead of fighting against them. The next phase of crypto isn't anonymous chaos, it's compliant confidentiality, the kind institutions can actually use. And this is where zero-knowledge proofs really come into their own. It drives me insane when I go and buy, let's say, some alcohol, and I have to hand over my driving license, which has my address, my date of birth, where I was born. Personal information I do not wish to share with a random stranger, but the only way I can end up acquiring this alcohol, proving that I'm in fact over 18, is by giving them all this data. That is completely ridiculous. Zero-knowledge proofs completely circumvent this issue. You don't need to show you are this person, you just need to show you are over 18. It's very easy to prove you're over 18 without revealing everything else about you. And this model of compliantly private already exists. ZCASH was created in 2016 by 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏. It was a Bitcoin fork built around one simple idea. Fix the flaw Satoshi couldn't. Back in 2010, Satoshi wrote, Bitcoin would be much better if transactions could be encrypted with zero-knowledge proofs. At the time, that couldn't be implemented. The math didn't exist yet. A few years later though, world-class cryptographers built it. ZCASH kept Bitcoin's foundations, 21 million supply, proof of work security, but added privacy by choice. You can send transparently, or you can shield your transactions completely. This choice made ZCASH the first compliantly private crypto network in the world. And when regulators came for privacy, ZCASH survived. It wasn't built to hide crime, it was built to protect users. ZCASH did still fade though, and you can see that in the chart. It got absolutely crushed, but it was deliberately pushed aside by regulators. Between 2021 and 2023, major exchanges delisted it across the US, in the EU, in the UK, to make sure they stayed compliant. However, shielded withdrawals, so withdrawals to a shielded address or deposits from a shielded address, the ones that can't be tracked, the ones that are inherently private, were blocked. But this is the whole point about ZCASH. You can choose to not use a shielded address. This means that actually ZCASH survived on these exchanges and has still been able to be traded today. They just have to do it in a regulatory compliant way, i.e. you can't use shielded addresses to deposit funds onto exchanges, and you can't send money to a shielded address from a centralized exchange. Therefore, it's compliantly private. In 2024, policies shifted. The US relisted ZCASH on several exchanges, and wallets began re-enabling shielded transfers. Not because regulators suddenly loved privacy, but because they finally understood it could be done responsibly. And this is the thing, ZCASH never changed its code to become this compliantly private thing. This is how it was built from the ground up. And on a technical level, it's still far ahead of basically everything else in that space. ZCASH's shielded transactions don't put personal data on chain, and even if and when quantum computers break today's encryption, Google made a big breakthrough in the last few weeks with their Willow chip, there's nothing they can actually do to ZCASH, because even if quantum computers break today's encryption, there's nothing to reveal, because nothing sensitive ever touches the chain. And this is probably why old Bitcoin miners, early Bitcoin OGs, early Bitcoin devs, and lots of large whales are rotating into ZCASH from BTC. This often happens at the end of the cycle, however, so it could just be the privacy pump at the end of the cycle. It looks to be a bit more than that with the regulatory framework we have as a backdrop. Now, before we finish, let me be clear. In crypto, you can be four things. You can be early, late, late, early, or late, late. This ZCASH trade is late. It is so late. It's already up 10x in the last few months. And maybe that's it. Again, maybe it's an exit pump that people are using to anonymously cash out all their crypto gains. However, with privacy clearly gaining so much steam as a narrative, I really think it's a space that can almost act as insurance on a portfolio. Currently, I have absolutely no exposure to privacy, and I think I'm going to allocate between 3 and 5% of my portfolio to privacy tokens. Of course, probably ZCASH is going to be a decent chunk of that. 𝗙𝗏𝗏𝗏 thinks it's super important. We've got a regulatory backdrop that requires privacy, that needs on-chain privacy. And privacy is no longer seen as inherently bad. And if Bitcoin is insurance against the establishment, then ZCASH, or whatever the main privacy asset ends up being, can be seen as insurance against Bitcoin. And maybe you do need insurance against Bitcoin, because Bitcoin has become everything that it wasn't intended to be. BlackRock are going to hold about 10% of the supply by 2027. That was never the intentions of Bitcoin at the start. One other project in this space I'm watching is RAILGUN. It lets you interact with any EVM compatible chain privately. So you can swap, stake, LP, all that sort of stuff without needing to bridge. So because there's no need for a bridge, it's inherently more secure. It creates a zero knowledge wallet. This is a bit similar to ZCASH in a lot of ways, almost like a shielded address. So everything you do stays private. You can then, if you so desire, create a viewing key so that you can show your transactions to a regulator or anybody who you might want to show them to. But what's really interesting about RAILGUN is that it generates revenue. So talking about $6 million in fees, annualized fees over the last year. And fees go back to the protocol and are redistributed to the treasury. And it's trading at like $150-ish million, which is, not Hyperliquid level price to earnings ratios, but about 100x more efficient than Ethereum on a fee to value basis. And I might do a full show on this and other tokens in the privacy sector. If you want to see that, let me know. I don't particularly think you have to go too far afield in this particular sector. Just betting on the winners is probably the best insurance policy, I think. That's probably what I'm going to do. If you want to see that full show, let me know in the comments. But for now, the takeaway for me is quite simple. Privacy isn't necessarily a trade, it's a return to what crypto was meant to be. Another potential player in the privacy space is ZK-Sync. ZK-Sync was a layer 2 on Ethereum. It still is that. It's called ZK-Sync Era. But they've built an entire tech stack, and this tech stack is programmable in any way. So if they want it to be private, they can have it completely private. If they want certain parts of it to be private, they can have certain parts of it private. Providium is actually bringing Deutsche Bank on chain as well, and they've got something like 30 tier 1 financial institutions that are looking to build on their infrastructure. There's a DEX called Gravity. You've probably seen Gravity. Gravity is a DEX that has privacy built into the chain. This privacy narrative, I don't think, is going anywhere, especially as more institutions actually come on chain. At some point, these products, these infrastructure will decouple from Bitcoin's price action. Now, of course, knowing exactly which ones that is hard, and no one's going to be able to say exactly what that is, but understanding this is a very important narrative, one that's not going anywhere, and going deep and finding these projects, the ones that are actually making advancements, I think is essential and something that I'm definitely going to be looking into. Please, please, please do me a massive, massive favor and go check out our new podcast, link in the description. The first episode should be live today, that's with Santi, but there's an amazing episode with the founder of ZK-Sync actually. That full episode on ZK proofs is going to drop within the next 3 or 4 weeks. Please do me a massive favor, go check out the podcast channel, subscribe, watch the first episode, and when that ZK-Sync one drops, go check it out. Otherwise, thank you ever so much for watching. I hope you have an excellent day. I shall see you in the next one.